Good morning. So I'm guessing you're like most people and you've got a credit card or a whole assortment of credit cards. Um, but if you've taken any notice of those credit cards or how you manage them, particularly if you're not paying that card off on a monthly basis, you might be getting a little bit sick in the stomach to see that interest charge appearing on your statements every month. And just wasting your hard-earned money on paying interest that you shouldn't really need to be paying. Now, if you've got a whole bunch of credit cards or a credit card and you're not paying it off every month, maybe you should have a look at your statement, because if you don't realize you're paying interest, I can pretty much guarantee you probably are, because of the way you manage your card, and that is just flushing money down the toilet. So it'd be worth checking that out. You might get a bit of a rude shock. Anyway, hi, I'm Michael Sgarbossa. I'm a personal finance enthusiast, had a career in railway construction for well over 20 years. And my goal here is to make money simple for you, give you simple, actionable steps to be able to, and strategies to be able to help you grow your hard earned money and shortcut your path to retirement. So I created this community, Save, Invest, and Grow Your Money, simply because it's been a passion of mine for over 20 plus years, researching personal finance, gaining the knowledge and to grow the wealth and security for my family, and I simply just want to be able to share everything that I've learned to be able to help you along that path to get your family financial security and wealth growth under control or in a great space. Just before I proceed, I'm not a financial advisor. As I mentioned before, personal finance is a very keen interest to me. I've got a career in railway construction. I'm an engineer, but I do know a lot about the space. But just note that anything I'm sharing here is just simply what I've learned over the years to help you ask better questions about how to manage your family's finances and put you on the path to wealth success. Anyway, moving on. So just as I was saying, unless you pay your credit card balance off in full every month, I can guarantee you're going to be paying interest. And it's not just a little bit of interest. This is sort of like loan shark territory interest. Most credit cards are at least 20% on their interest charge per annum every month. So that is just it's a ridiculous amount of money to be paying. It's a ridiculous premium to be paying for a bit of easy money, and you're just flushing money down the toilet. It is an utter waste of your money. There are much better ways to manage your money than to be paying credit card interest, and that's something that none of us should ever have to or need to do. It's just ridiculous. Okay, so a quick search on Google will tell you that the average Australian credit card holder has a balance of $4,200 annually. So that's a fair bit. So you think about it, $4,200 if you're an average credit card holder. I don't know what your balance is, but you take 20% of that. 20% of 4,200 is $840. So you're probably paying an extra 840-ish or more in interest on an annual basis if you're continuing to carry that balance and not paying your credit card balance off in full every month. Now think about how many times have you asked yourself, oh, I wish I had an extra couple of $100 or a few $100 for this or that, or want to go and have a nice meal and thought, oh no, it's a bit expensive. Well, you're flushing it down the toilet on interest. So let's just get those credit cards under control for you, and then you can take that $840 or more or less or whatever it is for you and spend it on something you want to spend it on. So anyway, so the other thing that pops up as well when I talk about this is people say, oh, but I pay the minimum charge every month. Well, the minimum payment, this is the bank's money making trap. Okay, they give you this little minimum payment. It's a target for you to pay. Oh, I've met my minimum payment. All good. This is I've got this balance. I'm not paying much for it. Fantastic. But that's how they trap you in. That minimum payment is like maybe 2% of your balance. But once you pass the 55-day interest-free period on your purchasing, bang, you're back up to that 20%. So, you're paying a fortune. You really are. And we need to stop it. If you're doing that, we really, really need to stop it. Credit card debt is toxic debt. And it's toxic debt because none of us want to be paying 20% interest, right? Like I said, that's loan shark territory. I don't think anyone's been proud of getting tangled up with a loan shark. And basically, dabbling in credit cards and not paying the balance off in full is what you're doing. So if you're not paying your balance off in full every month, the harsh statement here is you're really not responsible enough to hold on to a credit card. So you should get rid of it. get rid of your cards. Okay, so cards can be good. I use a credit card now. I only have one credit card. I use it for all my expenses, pay it off every month. One of the key reasons I do that is I found a card, there's no annual fee, and I get all those reward points. And those reward points over a year gives my family a bunch of free flights for holidays on one holiday a year. So that's a pretty good benefit. But it's because I manage it meticulously. I always pay it off every month. I found the card that doesn't have a annual fee because I spent enough on it to be able to get that taken off. There's some out there. If you do have a card with annual fee and you think, oh no, I want to keep it for my loyalty points, well, those annual fees pretty much negate the benefit of having the bonuses from the loyalty program. So just have a think about that. Anyway, so moving on, I've got 3 key steps in that I've got for you here today to help you get on top of your credit cards and get on top of your credit card debt and stop paying that unhealthy high interest on your credit cards. So I've just got a slide that I'm going to talk to today to help you through it. So I'll just get that up on screen. Hang on for a moment. There we go. All right. So step number 1 is stop using your cards. Simple as that. Okay, so you might be thinking, yeah, that's great, but I use that card to live off. I can't afford to live if I don't use the card. Well, you're really a month behind. Okay, you're just putting everything off by a month, but you need to find a way to get in front of that. The easiest way to stop contributing to that credit card balance is to stop using the card. Okay, so how do we do that? Well, firstly, in the physical world where we've got our nice little card, if you cut it up, you can't use it. Bang, down, done, simple, gone. So I would recommend doing that. There's something really empowering and symbolic about getting a pair of scissors and cutting through a card. And it gives you a little bit of power over something that's taken some power away from you around managing your money. So if you're really serious about it, I would suggest go and do that. Bang, done. It's a decision. Bang, you've made a decision in the moment. You've cut the card. You move on. Now, I know some people have a real problem with this. They don't like destroying their cards. They're a bit scared with that. But at least do something so it makes it hard for you to use it. Take that card, stick it in a Tupperware container, fill up for water, put it in the freezer. Pretty hard to use it when it's in the middle of a block of ice, but you haven't destroyed your card. So if that's something you want to do as well, you get creative to be able to get around, putting roadblocks in place to so you can, sabotage yourself into success, so to speak. The other thing you can do, particularly in this day and age, is our cards are virtual these days. So, through your credit card app or your banking app, Apple Pay or Google Pay or Samsung Pay on your phone, whatever you use, everyone's using their phones these days. Everyone's got our cards linked up. So we've got to do something about, okay, how do you cut up your card if it's in the virtual world? Okay, well, that's pretty simple. Go into your banking app, put a temporary block on the card. I know it's easy to undo, but at least then you've taken a step, you've made a decision, temporary block. You've actually got to then consciously do something about unblocking it to use the card. The other thing you can do is also delete it off your pay apps. So delete it off your Apple Pay, your Samsung Pay, your Google Pay, wherever you might be using it. Just delete it out of there. Then you don't have that quick and easy access to it. Beep, on your phone, done. Okay, so that's another thing to do. Now, a lot of people these days are using their credit cards for direct debits as well. So you might have some direct debits set up on your card. Do not use a credit card for direct debits. Okay, use it out of your living account where your income comes in, where the cash you live on a monthly basis. Set up your direct debits from a debit account, not a credit account, please, please, please. Now, and this has come up before. Some people go, oh yeah, but I get all these loyalty points and blah, blah, blah. Yeah, that's all good. But you probably don't realize that most of these organizations, when you're using your credit card or you set up a direct debit, they're probably charging you 1 to 1.5% extra just for that privilege. That 1.5% extra pretty much negates any value or benefit from your loyalty program. So you're doing it for nothing if you think that's where the benefit is. So just stop it. Okay, so that's step 1. Stop using your card. Okay, so I'm just going to move on to step 2 now. Stem the bleeding. All right. So we need to somehow stop. Get away from that toxic interest. So you've got a balance there. You're not on top of it. You're paying your minimum payments. It's going to take you some time to pay that balance off. I know that can be a bit scary, but in the meantime, you don't want to keep paying 20% interest. So there's some things you can do here to move that balance, get it into an environment where you're paying a lot lower or no interest for a period of time. Give yourself some breathing space to get yourself together and then start paying down that balance and getting rid of that credit card debt. Gone. So the two big things here, which I think are very, very effective. The first one I'm going to talk about is using 0% balance transfers to credit cards. I know it seems a bit counterintuitive. I'm saying get rid of your credit card, and the first thing I say to fix the problem is go get another credit card. Yeah, it does sound a bit strange, but hey, let's play the banks at their own game here. Okay, so credit cards are a money making machine for financial institutions, and the reason that is that because they know that we're going to trip up and we're going to end up paying that 20% interest. There are so many easy ways to trip up and do that. So they're always enticing you with special deals to come over to here to Bank ABC and have my credit card, because they know at some point you're going to start using it, trip up, pay 20% interest. So one of the ways they do that is they offer 0% balance transfer deals. Now, what a 0% balance transfer is basically you've got your $4,200 on your current card over here. Let's for argument's sake. You're paying only the minimum payment because you can't really wrangle enough together to pay more than that, or unaware of what damage that's doing to you and all the interest that you're paying. You continue to pay that 20% interest. So what you can do is you apply for the 0% balance transfer card, and they'll happily say, oh, we will pay off this card over here, the $4,200, from this card here. So now your balance is over here on this card ABC, with 0% interest, usually for 12 or 18 months. So that sounds like a pretty good deal. Mostly they charge a 1.5%, sometimes even 2% premium to do that. Yep, it's a charge, but you know what? It's less than 20% per annum. So it's probably not a bad thing to do. But if you look hard enough, you'll find that there's always a couple of offers around, and it's not always, but more often than not, where it's a no fee transfer, 0%, 18 months. It's basically free money for 18 months. Sorry, I should rephrase that. I wouldn't say free money, but an opportunity for you to park your debt for 18 months at 0% and not cost you anything. Okay. So this is why I think balance transfer cards, this is a mechanism that you can use. Playing banks at their own game is really good. So why do they offer that? Because if you go past that 12, 18-month period and you haven't paid your balance off, guess where you're at? 20% interest again. Also, once you do that, there's still a minimum monthly payment to pay over there as well, which you absolutely should do. It's the rules of the game. You miss that payment, what do? Well, you've defaulted on the deal that they gave you. You're back to 20% interest again. So you've got to be careful. There's a couple of things there that can trip you up and really catch you out. But just imagine that you can move a balance over for 18 months at 0% interest, no fees. It gives you time then to work that out. Okay, it gives you time to go, okay, I've got $4,200 on my balance. I've now got in a 0% environment. That's giving me breathing space for, let's say, for 18 months to knock that over. Okay, what do I have to pay every month? So when we get to 18 months, it is zero. So you don't get trapped in that 20% interest trap. Now, for $4,200 over 18 months, that's about $233 a month. I'm sure if you looked hard enough, you could find that. But let's overshoot that a bit. Let's say $250 and get it done a bit early, just in case something pops up. Okay, so that's a really good way to do it. What I would suggest is go and have a look at the comparison sites here in Australia, ones like CanStar or Finder, and there's a few others that you can go and have a look at. See what the credit card deals are there. Search for the 0% balance transfer ones. Try and find one with no fee attached to it as well, and make an application. And there's you go through online and you can do the application form, and it'll ask you a whole bunch of personal questions about you, and also what are your current credit cards, loans, all of that sort of thing. Now, what I would say is when you go to do this, have a look, find 2, 3, apply for them all at the same time, because the application form asks you for the cards you currently have. But if you're applying for 2 or 3 at the same time, you don't actually have those cards yet. So I don't know you're applying for that. Okay, so it's a little sneaky way to make sure that you're covered. Who knows? one of them, they might not like you for your current credit history. They might not grant you a card. But then if you just do one, you miss out on that. Then you go again. They'll see that you've done that on your credit file, and it sort of muddies the waters a bit. You don't want to do that. Um, if you get more than you need, pick the one that's best for you. Don't go through with the others that you're being given. Simple as that. Now, the other thing that you could do in regards to step two about stemming the bleeding, getting yourself away from that toxic 20% plus interest that you're paying. And I would do this if you're not comfortable with the 0% balance transfer option. You just want to get away from credit cards altogether, which is a good thing to do for your psyche. Or it might be a case that you're struggling to actually get what you need through that, to be able to pay to cover your balance that you want to transfer. So the other thing you could do is use a debt consolidation loan. So if you go into any bank, any building society, like again, use CanStar Finder. You can probably find them on there. It's a debt consolidation or personal loan. Usually around, might get it for 8%, but probably about 10 or 12%. Still a lot less than 20. But it's a place to go just to knock that interest down, because if you're paying less interest, that's more you can pay towards getting rid of that balance, that credit card debt that you've created. Okay, so I know there's a lot of companies out there who help people with their debt consolidation. So a do it for you service. I'd be very wary about them. If you want to get on that road, really check them out with a fine tooth comb. A lot of them have some sort of premium fee attached to it, or they're a bit like a credit card. If you don't meet certain conditions, you trigger something, then bang, you're back paying a whole heap of interest or high penalty fees because you haven't kept up your end of the bargain in regards to paying down your debt. So I'll just be wary about that. Just be very, very careful using those types of companies. Okay. Now, the other thing that people have asked me as well, oh, why don't I, who, they might have their own home, their own mortgage. I'll just do an equity release and I'll just get a bit of money out of my home and I'll go and pay off the credit cards. Don't do it. That's my suggestion. Not a great idea. Taking your toxic consumer debt on a credit card and putting it on your home loan, which is a long-term loan, is not a good idea. Just use the other means to get rid of it. Don't use your home loan, please, 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 because then you just wrap that. You're now muddying the water. I would call your home loan good debt because it's an asset that appreciates. There's arguments around your home because it doesn't bring in income, but still, don't go putting toxic consumer debt on your house. For that matter, don't go equity releasing your home and going and buying a boat. Equity release your home and go and buy an investment property. Yeah, good idea. Okay, but that's a whole other video. I won't get into that today. Okay, so step number 3 is you got to find the cash to pay down the debt. So there are a few ways here we can do that. You want to find that extra cash so you can knock these debts over as quick as possible and get on with living your life the way you like to live life. Now, I would already assume that if you've got credit cards, you're at least paying the minimum repayment, or you've got some level of payment that you're already doing. So the first step would be is continue with that commitment. You're used to paying that out. Make sure that forms the basis. Okay, but we need to load that up a bit more because you've developed some debt here, and we need to go a bit harder at it to knock it over so you can get free of the credit cards and carrying toxic debt. Okay, so what I would do is I would get your credit card statement, go through everything that you purchase on a monthly basis or maybe on a quarterly basis. Just go right through that and just have a good hard look at it. Go, okay, am I getting value? Is there anything here I'm not really using? Is there some purchases here that is not really giving me value for the way I live my life? Is there some things here I can put off for a season or two? So a season, what's that? That's 3 months, summer, autumn, winter, spring. A season or two, I'm just going to put off those purchases, or I might just delay, maybe don't go out for dinner 2 or 3 nights a week and cut it down to one or something like that, or once a fortnight. Just do something that helps you create a little bit of extra breathing space, something that can get you a little bit of extra cash and get over the top of these debts. It might be simple as you're streaming TV. You might have Stan, Netflix, Disney, or whatever, but you probably find maybe you're only watching Netflix and Disney and not really much of Stan. So why don't you just can the Stan membership for for a few months or a couple of seasons, So have a look, go through all of that. There's probably some things in there you think, oh, maybe I should just stop that altogether. Find ways to create that little bit of extra monthly free monthly cash you can put towards your debts and knock them over quickly. So there's nothing better than to getting rid of your debts for your mind. It's good for anxiety, financial anxiety. That's the best cure, getting rid of debts. The last thing I would say is sell some stuff. So you probably bought a whole bunch of stuff on that credit card that you did use for a bit. Now it's sitting in the garage, in a bedroom cupboard somewhere, whatever, right? You might have a whole bunch of kids' toys. I know what it's like. My house looks like Kmart. I've got a 3 and a 6-year-old. I think I've got more toys than Kmart, actually. Sometimes we have to go through and do a bit of a cleanup. But you know what? Someone's trash is someone else's your trash is someone else's treasure, so to speak. Go through, have a look at all your stuff. Maybe there's some stuff in there that you can just go, look, I just need to get rid of this. Get on Facebook Marketplace, Gumtree, whatever you use, and pass that on. Get some of that great stuff that you bought to a home where it's going to be of greater value, and just create a little bit of extra cash on that. Nice little sugar hit. Might just knock the tops off some of those debts for you. Maybe you've got a lot of stuff, so maybe you can put a real dent in some of those debts. So that's it for me today. That's my 3 key steps to getting your credit card under control. So I hope you found that really valuable. Like I said, stop using your credit card. Stem the bleeding. You want to get rid of you want to get away from that very expensive interest charges that you're paying, so you can put that towards paying down your balance. And just looking a bit harder at maybe what you've got around your house or what your current spending habits are, and where you can spend money a bit differently to create yourself a little bit more breathing room, a little bit extra cash to getting in and knocking over those debts. So it's very liberating to get past credit card debt and not have it any longer. It's such a liberating feeling. I know many years ago, I probably abused credit cards a little bit, got myself into a spot of bother, minimum payments, that sort of thing. I had more money on cards than I could actually cover with what my income was, and I had to get on top of that and sort that out. I used the 0% balance transfer strategy that I spoke about in this video, use it very effectively. I've been on top of my credit cards ever since. So I pay that balance every month. I actually canned them for a bit. And when I felt that I'd mature enough in my spending habits and around managing my money, then I've used them again, and I get a few free flights a year for my family for holidays. And that's what I do for me. So anyway, if you go through this, and I know you can, take the step, make the decision. This will help you create a better attitude towards money. It'll help you have some realization around your spending habits. Pardon me. And just be a little bit more responsible for your spending and how you manage your money. So take this stuff today, put it to use, get yourself out of the credit card trap. That's it from me today. I'm Michael Sgarbossa. Have an awesome week, and thanks for coming and spending the time with me today. Thanks a lot. See you later.